Good afternoon. Welcome to the Business Boardcast. I'm Nicky Larkin, your host, and today I'm very lucky to have Olivia Evans, Tax Manager from Goringe Accountants, as my guest. Hi, Olivia.
Hi. We're talking about MTD for income tax today.
Absolutely, we are. So this is going to affect a lot of people at different times. So what we're aiming for today is whether you're a taxpayer or an accountant, is to understand for the taxpayers what you need to be aware of, what is happening with Make Tax Digital, to make sure that there's going to be no surprises. And Olivia at the end, she's got her top 3 tips for the taxpayers, so make sure you tune through to the end to get those top 3 tips. So there's quite a lot to go through, so I won't delay any longer. Just as always, please do post your questions and comments in the comments, even if you just say hi, because it's nice to see who's watching live, and we will endeavour to answer any of the questions as we go along. So let's dive in. Olivia, so what is Make Tax Digital? Is MTD, that's what it stands for, Make Tax Digital, but what does that actually mean to a taxpayer?
So for the taxpayer, it means that it's kind of the end of the shoebox record era. That means that all records are to be held digitally. That could be done through a variety of softwares.
Okay, I like that. I like how you said it's the end of the shoebox era. One can only hope. To be fair, we have very few shoeboxes come to our office anymore.
Very rarely shoeboxes. However, by shoebox, I mean manual records where receipts are given in some sort of format. Previously, like some have been shoeboxes, but it could be also in folders. But these are manual records, and that will be the end of most of those. There are some exemptions to Making Tax Digital for income tax purposes. However, that will not be the majority. They are exemptions, not the rule.
Okay, so let's get into the detail. Who will it affect?
So it will affect all rental landlords and sole traders above 30,000. But they're doing.
Sorry, just to be clear, it's landlords that own the houses direct or properties direct, isn't it? Rather than within a limited company.
Yeah. So, sorry, that is the threshold at the moment, but they're staggering it. So the first threshold is going to be those that have income from those 2 sources above 50,000 for tax year 26-27. That is going to start from the 6th of April 26.
So
the 30,000.
So from the 6th of April 26, it's how much?
50,000.
50,000. So if you've got £50,000 of rental income, and that's rental profit or income?
To clarify, it is the rent received and the revenue received from sole traders. It is not the profit.
That is a very important thing, because lots of people think, it's fine, I only make £5,000, it's not a problem.
It did catch me out at the very start of me looking at Making Tax Digital for income tax until it was later clarified for me.
Absolutely, yeah, and lots of people, people get confused. It's very important to. So it's 50,000. Sorry to repeat this, but it's we need to make sure. So if you receive £50,000 in rent or £50,000 in sole trader income from 6th of April and 26 per tax year, that means you're going to be caught by this Make Tax Digital. What about? So apologies if I haven't.
I just wish to clarify. I just wish to clarify a point. If, as an example, you had 30,000 in rent received and 30,000 in sole trader revenue, that does count as 60,000. So that will be a total of the two.
We've clearly worked together a long period of time, because that was exactly the question I was going to go. I was going to go for 25,000 and 25,000.
Very close.
Yeah, absolutely. Thanks, Liv. So so hopefully that's clear. If you've got 50,000 total income on your self-assessment return for your sole trader income or your partnership income or your rental income, it doesn't exclude things like dividends or...
It excludes dividends and PAYE.
Okay, so it's not interest either, no? So it's not interest income, it's not dividends, it's not PAYE, but if it's rental, sole trader or partnership income, it needs to be, you're going to be affected. Okay, so we established that, so from 26 it's 50,000, and then I believe it then brings in some more people at some point.
On the 6th of April 2027, it will bring in people who have income above 30,000. So the threshold is.
Okay, so it's 30,000 rent and or revenue from the 6th of April 2027. And then I think we had another announcement on Wednesday, I believe. Is that right?
We did. Until up to Wednesday, HMRC had promised that they would consider those on income above 20,000, so between the 20,000 and the 30,000 income, but no date had been set until Wednesday, which I did read yesterday.
It's from 2028, isn't it? 20,000. Let's double check that. Any of our fact checkers back in the office, can you just fact check that? I'm pretty sure it was the 2020. So I think they were saying 28, 29, which obviously is from the 6th of April. So
yes.
So 20,000. So essentially, if you are a landlord that owns your property privately, not through a company, and you have sole trade or you have sole trade income and you have partnership income, pretty much in the next few years you're going to be affected by this.
I forget the exact percentage, but it was somewhere in the 90% region of taxpayers would be caught. Of sole traders, apologies.
Of sole traders,
Of sole traders, apologies,
90% of sole traders will be caught,
yes.
Absolutely, that makes sense. Okay, so so what does that mean? What are the actual filing requirements? What do they need to do?
So when I first started reading about Making Tax Digital for income tax, I thought it would be similar to Making Tax Digital for VAT. However, it is actually a little bit different. Some of the dates you might recognise, but there is a key difference. Okay. So let's say someone has sole trader income of 55,000 before any costs are deducted. Their first filing requirement will be on the 6th of April for the period from the 6th of April to the 5th of July 2026, and the filing will be due on the 7th of August. So that's where the similarity with MTD for VAT comes from. It's a month and then on the 7th. So it's very similar in that regard. However,
how often do they have to report this?
Quarterly. Every quarter.
Quarterly. Okay.
And then where the big difference is the next quarter. It will be from the 6th of April to the 5th of October. So they do it on an accumulative basis.
So, okay, but most people do their reporting on a month with the month end rather than the 5th as being their end.
They do allow for it to be the month end instead of up to the 5th.
Okay.
So that,
okay. Yeah. We don't have to start doing some odd things.
Yeah.
Okay.
They've started off with the basis of everyone worked to the tax year from the 6th of April to the 5th of April.
Right.
However, they still have allowed for that 5-day difference from the 1st of April to the 31st of March.
Okay.
In regards to their reporting.
Okay, fine. So essentially,
the date for
so if they're already VAT registered, is there really anything additional that somebody needs to do in their bookkeeping to then do their MTD filing?
As far as I'm aware, in what I have been researching, there is no significant difference.
Do they not have to do like their accruals, or is this cash accounting? Is it cash accounting?
That is something that I am still researching at this time. However, if it's not done as part of your tax return, then it's not necessary as part of your MTD for IT.
Yeah, because of course a lot of rentals and smaller sole traders do things on a cash basis, and I think the cash is
rental is reported on a cash basis.
But of course, you do need to think. Some I'm just aware that some sole traders, they push everything in for their VAT return that's VAT, and then they do all the rest at the year end sorting it out. But you need to remember, you do need to include your insurance and your stamps and your train travel and whatever else to make sure, because you need to make sure you're showing the full cost. Otherwise, you'll be during the quarters showing really high profits and at year end showing a lower one, and that's obviously when HMRC is going to be thinking, good question. We've got our first question in. So it's not from Joe who's with you, it's from the other Joanna Culver. So Joanna says, do you think that quarterly reporting will remove the stress of once a year SATR deadline, or just multiply it by creating more deadlines? Okay, so does it mean that we have no stress, or we now have 4 times as much stress?
I think it is kind of a yes to both, in that all the reporting has to be done for a final declaration. So that takes off the stress of a once a year tax return deadline, which about 12 million taxpayers have to adhere to, that have to comply to, which takes a lot of stress off the accountants and off the taxpayer, and they will know how much tax they have to pay that much earlier. But you are also right in that it does add the stress of creating more deadlines.
So you still would be doing 4 quarterly returns and then still do a personal tax return?
A final declaration.
If you've got a self-assessment, so if you've got a sole trader that's got rental income, sole trader income, but then it has some dividends too, or interest, they'll need that to pop onto their personal tax returns still, won't they? Presumably.
Yes, so there will be a final declaration where other sources of income will be reported and any other reliefs. So there will be bank interest, dividends, PAYE, pension contributions, pension received. All of that still needs to be reported. So there is still a final return that needs to be filed.
Okay. Another question.
Will the tax be paid quarterly? Currently, no. As it currently stands, no.
Okay. So at the moment, no. My inkling is that it does open them up to the possibility that they may do that at some stage. So remember, at the moment you've got, so if you have, is it 2,000 tax or more a year, then you would be doing payments on account twice a year.
1,000 if you have income.
So it's just 1,000, not 2,000. Okay, yeah. I had in my mind 2,000. Okay, so 1,000. So if you've got more than 1,000, you have to do payments on account in January and July.
Mm-hmm.
No, the next, why not do it January, April, July, and October?
It will certainly allow them to have the information in order to assess whether or not they can do that. Rental income and self-assessment income are 2 types of income that are significant however, are not taxed at source.
Mm-hmm.
You could also make that argument for dividends as well. It'll be interesting to see what HMRC and the government decide to do in the coming years about this.
Yeah, so I know that you've been reading up a lot on it, and you've been going to lots of different webinars and things. So has there been any inkling? So you'd be doing your fourth quarter, you would be reporting that in May. So is there any likelihood that they'll change the 31st of January deadline? Because it's like, why wait another 8 months to file your tax return?
I have not seen anything about them changing the deadline for the final.
Cynical in my old age.
Or what is known as the self-assessment return, which is done annually. I don't foresee that changing significantly due to other elements that go into a tax return. So, for instance, So, for instance, P11Ds themselves are not required to be filed until the 5th of July, so they wouldn't be able to bring it that much further forward from that.
We only got one more year of P11Ds as well, don't we? They're going to be an extinct thing soon. Only one more year. I think what it could be. Let's think of a positive thing for this. Let's drag in a positive. I suppose if you have been doing it and you've done your final declaration in May, that does mean that you can then potentially be going, oh, okay, I need to reduce down my July payment on account if it's too much.
Yes. So that certainly does give more information.
Yeah, I do encourage clients to do their tax returns before July so that they can bring that down if necessary, because why give a loan to HMRC if not? But of course, it could be
interest-free loan as well.
Oh, yeah, you don't. Oh God, yeah. Anyway, that's a whole nother half an hour.
Not that it's a lot anyway, but
rates with HMRC at the moment.
It also it encourages people to complete their tax returns earlier. And self-assessment generally tends to be one of those that takes the longest to collate all the information for, and then to prepare, and then to review. So
we could start into Christmas again.
Yes. There's a lot of options available to taxpayers specifically before the 30th of November.
Okay.
Especially if you want to go for the second payment on account, you need to get it done by the 31st of July.
Yeah.
However, things like if you need a time to pay arrangement, or if you need to allocate your tax liability to your PAYE code, these options are only available before a certain time. So getting your tax return done quicker, and anything that encourages that, I see as it is a nice thing. So.
Okay. Software. So presumably it's makes tax digital, so it needs to be online. Is there HMRC software, or is it private software? What would we be using?
There are various softwares available. I would encourage taxpayers to seek out software that works for them. I personally have my favourite. Other people don't agree with me because a lot of softwares are really good, and it comes down to personal taste of what works best for you. We have mostly worked with businesses for VAT, so MTD for VAT. So we kind of know how to advise sole traders in the best software for them. I have been researching and trialing softwares specifically for landlords that don't just look after the MTD for IT purpose requirement. It's also making sure that you have reminders for insurance, EPCs.
That sounds good.
So I've been trying to find the best software for landlords and what
sole
traders.
Found so far? Do you want to share the one that you?
So the one that I like the most at the moment is Hammock.
Okay, so that's for the landlords.
That
Yeah,
is for the landlords, yes.
yeah,
So
good.
I liked how straightforward it was. It seemed fairly intuitive, and it did give a lot of reminders that were geared specifically towards landlords. It
Yes.
allowed properties to be split between individuals as well.
Oh,
So
great.
if you have a shared property with a family member or a partner, or as part of an investment, then that accounts for that.
Brilliant, brilliant. Okay, so
For sole
we've gone
traders,
through software. Right.
yep.
Okay, for sole
Just
traders, what
to name a
software
few for
at the
sole
moment you know
traders,
that's going to work for them?
my personal favourite is QuickBooks. However, Xero and Sage are also more than adequate for what you need. My reason for QuickBooks is if you need bespoke reports, it is very easy to customize them. But if you don't need those, then they will all help you with compliance for MTD. There are also other softwares available. If you wish to look them up, you can go for HMRC approved softwares for MTD for IT.
Yeah, and you know, a free agent is there as well. I think is going to do.
Yes.
So yeah, there's a lot. There's a lot of them around. The ones that have all been marketing hugely are all there, and some of them are encouraging you to do your own tax returns and things as well. Mm-hmm. I would just caution. Obviously, if you can do your own VAT return, your own MTD quarterly filing, fabulous, good for you. That's great. I would just caution, we've seen over the years so many mess ups, haven't we, Liv, where people, the thing is, you know, we do this every day and for many decades, and we still are often learning new things. If you're doing your own stuff and that's it, you are likely to not necessarily be doing everything correctly. And we've seen
that's not something that we expect our clients to get right all the time. There is a reason why we have a job, basically, and that's because we do this all the time. I've certainly seen some things when it comes to VAT, like claiming VAT on your VAT payment.
Oh my goodness, what VAT I've seen. So things that you see is like, people putting through VAT on everything, you know, on your salaries and all sorts of crazy things. Obviously not our clients, because we would correct any of that rubbish. But you know, it's software helps you. It makes things quicker, but it also can accelerate the volume of mistakes if you set it up wrong.
I think we're getting into the preparation part.
Yeah,
of
sorry.
Discussion.
Yeah. So, what does it? So, for those taxpayers out there, so what does it in reality mean to them?
It seems that at the moment it's a little bit more of an admin burden in relation to your business. Instead of one return, there's 4 returns. It may seem a little bit unfair.
Yeah, I think I would summarize it as potentially, yes, it can help the sole trader or the landlord become more up to date with their affairs and be a bit more organized. However, the reality is it is an additional admin burden, and I suspect a lot of them will not be very happy about this when they realize they've got to do it.
Especially those that are not technologically savvy. They may feel as though they have to. If I forget the term for it, but if they really cannot work with technology, that is actually one of the exemptions. Thank you. If you are technophobic, then it is actually an exemption if you cannot work with the software, with computers, with technology.
Yeah, but usually it's best, if that's the case, just outsource it. There will be bookkeepers that can help you, accountants, tax advisors. Concentrate on the bit that you're good at. Being a landlord, buying great properties, finding your tenants, or if you're a sole trader, if you're a plumber, going and fixing, complicated heating systems, whatever, which we wouldn't have a clue how to do. But what we can do is make sure that you get everything filed on time and get that sorted. So
Yes.
do the right division of labour. If I've got a problem with my heating system, I'll be straight on the phone to my lovely Sam, not trying to sort it out myself. So let's summarise it up. You've got top 3 tax tips for taxpayers. What are they, Liv? Do you want to share?
So number 1, you need to know if it affects you. This is not something that you can bury your head in the sand about. It's not going to go away. You can grumble as you do it if you wish. However, it is best to know if it will affect you and when it will affect you.
Yeah, so that's number 1. It's making sure you know if it is going to affect you is number 1. What's number 2?
Have a bookkeeping plan. Make sure that you either have picked a software, have been advised about a software, and once you know the software that you are using, make sure you either A, know how to use it, have received the training, or have found someone who knows how to use that software.
Excellent.
Yeah.
And we will do some more general workshops and things specifically for our clients and things nearer to the account. I know Liv's already, we've already sent out the advice, or it's about to go advice?
I've already sent out the advice for those that we think might be affected by it, even at the 30,000 threshold. So we're trying to keep ahead of it.
Yeah, so we've already been speaking to our clients of that we think might be affected. And the third top tip, Liv?
Make sure that everything is ready for when it will affect you. So keep it in mind. Yeah. So keep it in mind that my total income is 35,000. So it's not going to be from the 6th of April, 2026. It's going to be from the 6th of April, 2027. I've got to make sure I know what I'm doing and have everything right and ready by that date, not by the filing deadline of the 7th of
the relevant month.
7th of July. There we go. Working through the months really quickly.
Okay. So top 3 tips, just to summarise them again. Find out, are you affected? Second, sort out what software you're going to use or who you're going to outsource it to, or start getting your bookkeeping tip top. Third, find out when this is in. So it's in your diary, so there's no surprises. You can get yourself sorted. If you're just thinking, oh God, let's switch over and be a limited company, because this does not currently affect limited companies. There's no talk about affecting limited companies.
I have actually had a look to see if there's going to be an MTD for corporation tax, and there was a very small paragraph about there being no plans yet.
Good. No plans yet for corporation tax. So if you're thinking, oh my God, this is all too much, and you're thinking, right, let's incorporate or whatever else, it's a bit of a drastic thing to change just because of this, but it still could be an idea you need to be thinking about. But do talk up to your tax advisor and have a chat about what it means.
I would like to note that was before the spring budget. I don't think the spring budget mentioned anything about MTD for corporation tax.
No, I didn't. Okay. I didn't notice anything. But anyway, those are excellent top 3 tips. Thank you so much, Liv. That's really brought me up to speed on the MTD scenario, because I just knew it was coming, and I've been like going, it's okay, Liv's on it. Oh, I don't have
I've read many articles, and I've been on a few courses, so hopefully I have summarised all that time spent researching into a nice neat bundle for everyone watching.
Yeah, brilliant. Thank you so much, Liv. So if you want to have that summary that Liv's done, do contact Liv and she can email it. So if you're not one of our clients that have already got it, or if you are a client and haven't received it, but you think you might be, just do contact Liv at Goringe Accountants. She's on LinkedIn. If you're watching on LinkedIn, or just email into the office and we'll get that to you. But thank you so much, Liv.
All right.
Have a lovely weekend. It looks all nice at the moment. Nice blue sky.
It is a beautiful day, as you've probably seen.
We will be doing our next session 2 weeks, so it could be April already. I'm not quite sure what it's going to be yet. I haven't planned that far advance, unlikely, but there definitely will be one. It'll probably be regarding succession planning, about the deal market at the moment, about M&A. Actually, I've just thought, I'm meeting somebody this week that I think would be perfect to be on the screen in 2 weeks' time. So I'll see if he's up for it. So that will be it 2 weeks today. In the meantime, we succession planning have got a joint event with Clark's Legal at Caversham Golf Club. I keep accidentally saying Calcott Golf Club, so I hope people don't start going to the one golf club on the day. But Caversham Golf Club, if you go to the Clark's Legal website, there's details of that event. I think it's the 24th of April. We're doing a lovely breakfast event, myself and Stuart Mullins, going through all the timeframes for if you're looking to exit. So even if you're looking to exit in 5 years' time, it's really useful to be thinking about what things to prepare, what timeline, what all the recent tax changes have been, all sorts of different things. And then we've got some, I think it's discounted golf holes all booked up and everything. So, you can start preparing for being a business person, an ex-business person, of, seeing what it's like to not work that day and go and play golf instead for that morning. So do have a look at that. We will be doing Goringe will be doing a quarterly event in May. Just trying to sort out the venue, because our usual venue is having some work done, so we need to clarify what that is. Oh, and succession planning or at Countex in May, so we'll see there. But anyway, thank you so much. Thank you once again, Liv. You will be invited back nearer to the time of MTD to clarify any changes, because you were absolutely brilliant. And have a lovely weekend, everybody. Thank you so much. Cheerio.